Hello everyone, and welcome to another edition of our COVID-19 Power Lunch, our weekly video series where we discuss new developments and new legislation related to the coronavirus pandemic. I'm Erin Spiwak, partner with JMCo Company, and have been the moderator for the series. As a quick reminder, we have an online demand webinar on PPP loan forgiveness where we go over the application itself, demonstrating our in-house loan forgiveness tool, and walk our listeners through step-by-step on how the calculations that are involved. A link to that webinar is in the notes below. I do want to give a caveat that was filmed prior to what we're going to discuss today, which is the Paycheck Protection Flexibility Act of 2020. However, it is a good kind of just setting the overall mindset of what the application looks like and the information that you'll be required to fill in and complete. Although we expect that will change with the new law, I don't expect that it'll change dramatically. So it's still a good watch to just kind of get a better understanding of what the application and calculations look like. So on the menu today is our Paycheck Protection Program Flexibility Act of 2020, which was passed by the House, the Senate, and signed into law by the President on Friday, which made a number of changes to the existing PPP loan program. With me today to go over the details is Mike Sibley, a partner with JMCo Company and one of our in-house experts on the Paycheck Protection Program. So Mike, let's start with one of the big things that changed in this new act. And I must say, when we sat here last week and talked about this, I thought there's no way they're going to pass this within the next week. What are we going to talk about this week? And here we go, they passed it all within the next few days. So obviously Congress and the President had some impetus to want to really extend this program, which was a surprise to us, but hopefully a good thing to most of our businesses and clients who applied for this loan.
Yeah, I think there was some level of discussion about was 24 weeks too long, but there was just an overwhelming support in the House to try to get this done sooner, with a number of companies having their 8 weeks run out, trying to give some flexibility. I will say that, you know, the good thing with this is it does provide a significant amount of flexibility for businesses now. For some, it may end up being a moot point because the 8 weeks was really all they needed. But, you know, the major provision in this was the flexibility to now look at a 24-week period. And of course, they did in the act segregate between new loans after you're going to follow this rule, and then loans that were prior to it, you've got options. And of course, what comes out of this, and I think it's important, you mentioned the application program that we did earlier. We do think that the application is going to look probably largely the same, but with some new terminology, some different calculations. There's some new exemptions that will go on over in this session today. Of course, like we've been saying for the last, I don't know, what are we on, 10 weeks or 12, you know, so there's going to be more guidance on this eventually, because already we can envision a number of questions that we're going to have just to answer some of the basics. And we'll try to highlight some of those, but there's probably some that, even again, once the application is revised, we're going to probably have some more questions beyond that.
Well, even on the old application and the old spreadsheet, there was still some unanswered guidance, right? So this definitely helped extend things, but it didn't really answer some of the questions that we were looking at. So you mentioned it, the 24 weeks. So let's kind of talk about what changed from the original 8 weeks to now a 24 weeks, and what that involves, and who can fall into that, elect into that, and what the advantages and disadvantages of it are.
Okay, yeah, so what they really did was they changed the term. So that we've been talking about this term covered period for, you know, that was the 8 weeks. And so the 8 weeks covered from the date that you received the loan to 8 weeks later, 56 days. You know, we now know the days and the weeks and things like that. We've gotten really pushed into that. So what they did was they took the covered loan definition and they changed it to 24 weeks. So all loans that are received between now and I think the deadline is June 30th to apply for a new loan, will have to follow the new law in terms of you've got a covered period of 24 weeks. And what that means is when you get the loan, you've got 24 weeks or the earlier of 24 weeks or December 31st, 2020 before your covered period runs out. Again, we were all focused on 8 weeks as the covered period. Now we've got the flexibility to go to 24 weeks. Of course, the concern was for many companies was that they weren't going to be able to get enough payroll during that time frame, and even some of their overhead costs, the rent and utilities and the interest, they wouldn't even get to the 100% of the loan that they were before, because maybe they were at a substantially reduced capacity. They were just not able to bring employees back for whatever reason. Overtime was down substantially, commissions, all those reasons. And so what this allows companies to do is now spread that out further so they can continue to use that money and not have to worry about potentially paying back some or a good sized portion of that. So you go to 24 weeks. Now what they're saying is, if you did get the loan though before the enactment, so before the president signed it last week, you can elect to keep the 8 weeks. And there's a lot of pros and cons to, well, there's not a lot, but there's some pros and cons. If you may be a company that says, you know what, I only needed the 8 weeks and I want to get this over with, I want to get it forgiven, I want to move through it, that's great. But keep in mind, I think we mentioned this last week, banks just aren't ready yet. At least a lot of them are. They might be sending out updates and information, but they're getting their portals ready, their online calculators. So it might be a couple more weeks. So you've got time to make a decision as to what's the best way to go. Now, keep in mind that 8 weeks didn't come without some level of, like you said, guidance that we're still looking for from the standpoint, some of the details, transportation costs, what exactly are those? We still hadn't gotten that. There was a lot of questions about the alternative payroll period, even turning into potentially 10 weeks. And depending on how you were reading things, and there's people reading it both ways. So there was a number of questions that we actually still had on the 8 week period of time. Either way, you still have time to figure those out and to get it right. But it may make sense to do the 8 weeks if you were able to get there. Now, if not, obviously we've got the 24 weeks with that flexibility. Most companies will now have the opportunity to spread this out further. I know there are still some struggling, but with states opening back up, hopefully by the time you get to the 24 weeks, that loan has been able to be fully utilized between the payroll and the utilities and all those other overhead costs that are out there. So that's just the 24 week piece.
Right. And again, mention, even if there's some people who still haven't gotten the loan, so this new law will affect them, they can't elect the 8 week period. It is the earlier of 24 weeks from the time you get the loan or December 31st, 2020, correct?
Correct.
Okay. So one of the big questions that I'll give you the highlight that we don't know the answer to is, if you decide to use the 24 weeks instead of the 8 weeks, what happens if at the 16-week mark you're like, great, I've used all my loan proceeds for payroll, I should be able to get 100% forgiven. Can you apply then, or do you have to wait for the 24 weeks to be up?
That's a really good question. There was nothing addressed that says you couldn't do that. I'm not exactly sure what that means for the covered period and whether you do how you'll do the FTE calcs. I'm guessing that the SBA and the Treasury Department are going to come out with some guidance around exactly how to do that, because it doesn't seem to make a whole lot of sense to make people wait until they hit that, one of those 2 dates. Certainly, if you elected the 8 week, we'll go down that road and we'll get that applied for earlier. But it just remains to be seen. It's a great question, and I know that at this point the SBA has been holding off on guidance. You could tell until this got passed, and so I'm guessing there's going to be some time before we actually get that guidance out. As kind of typical.
Yeah, they're having to retool everything. They're like, oh, everything just changed. Let's go ahead and get some additional guidance. Right. Another question that's come out there is that we talked about last week was that they kind of capped you at the if someone was paid more than $15,385, which during your covered period, which equates to 8 over 52 of 100,000, right? Mm-hmm. So they said, hey, you can't pay any employee in any type of wage more than $15,385 and have it count towards your forgiveness. Well, how's that going to work now that you get 24?
I'm guessing we're going to use similar math, just over the 24 as opposed to the 8. I haven't done that math. I mean, we all had the numbers down. With the 8 weeks, we had the number of days, we had the 15,385. We had this down, but obviously, I think they're going to continue to prorate the $100,000 over the 24 weeks, or I'm guessing whatever the week is, the number of weeks is, if they allow you to use some period between 8 and 24, you know, something that's going to prorate out to 100,000 is going to be the max, which, you know, that, you know, one of the concerns I could see in terms of if they say, well, you can apply early or somewhere in between, is you're going to have a whole lot of new calculations, right? So that could potentially lead every application to have one's a 16-week, one's an 18-week, one's, and so you're going to have them all over the place. And I would think from a lender standpoint, and even from an SBA standpoint, when they're reviewing all these applications, that could get pretty complicated for them to have to adjust to. So I don't know if they're going to allow that ultimately. It's a really good question.
Yeah, hopefully when we find the answer out to sooner than later. So another thing that they put in there is all new loans now have different loan terms, correct?
Yes, so all new loans will, to the extent that 100% is not forgiven, as always, there was going to allow for that difference to be paid back over time. It was effectively 2 years, but there was deferments and 6 months, and so it would have been more like 18 months. Now it's 5 years. So loans will have a 5-year payback period, which is obviously significantly more. Interestingly enough, they did put in there, in the actual law, there was nothing to preclude lenders from modifying the original terms with those who already had the loan. So there's the potential that if there is amount to be repaid, that it could also be adjusted for a different timeline as well. I assume up to the 5 years, but you know, I'm guessing there'll be a little bit more from the SBA on that as well. But it sounds like they're going to allow that flexibility for those who elect the 8-week period as well.
Okay, good deal. So yeah, so under the 8-week period, you're still under the other 2-year, and the new loans are under 5 years. But again, they gave that wording in there to allow lenders to be more flexible, which, you know, I can't see why lenders wouldn't be, but there may be something in the banks that say, hey, we want to stick these at 2 years and not modify them. It just seems odd that we wouldn't be conforming to it with the SBA going ahead and backing these loans.
Right.
So the next thing they put in is they changed some percentages. So again, we had these perfectly memorized. Under the old law, you had to spend at least 75% of the loan proceeds on payroll. The other 25% could be spent on other items, which we've talked about before: interest on real and personal property, rent on real and personal property, and utilities. And as long as you did, that was all qualified for forgiveness. And they changed that percentage of 75% down to 60%. So they allowed more of your loan proceeds to be spent on those same other items, correct? But they put another caveat in there, which some people think they'll technically correct. Some people think that was on purpose. Can you talk a little bit about this provision?
Yeah, so yeah, you're absolutely right. They shifted the 25% to 40%. I think in particular for those businesses who were struggling to get back up to payroll capacities that they were before, so it allowed a little bit more flexibility. However, when they wrote the way they wrote it in the bill and said at least 60% has to be spent on payroll, it reads like a cliff. In other words, if you don't get to the 60%, none of it's forgiven. You know, if you think back to, I don't know, 8 weeks ago or so, we were having kind of the same conversation about the 75%. Would that be a cliff? Would it be all or nothing? And they did come back and say, well, it's based on a ratio of your payroll to that 75%. I think the same thing, it was the intent here was that the 60% would be the basis for the total amount of loan that could be forgiven. However, the way the bill reads, and many are interpreting it kind of the same way, that it's a cliff. And if you don't hit 60%, it's all or nothing. The good news is going out 24 weeks should be able to give most companies the ability to hit the 60% number of their loans. I mean, companies were looking at anywhere between 60 and let's say 74% in an 8-week time period. You know, it should be, but you know, there's always industries that are affected differently. Some are struggling to come back a little bit more than others, so you can't say that 100%. The 24 weeks should hopefully take care of most of that issues, but we did hear about the idea of a technical correction to fix that language. I don't think that was their intent, so we'll have to see. You know, at this point, it's still a good idea to kind of just see where you're at, what do you think the 24 weeks will give you? And if you are getting close to the 75% or even the 60% on an 8-week standpoint, you'll probably find when you extend it out to 24 weeks.
Okay. Well, and here's another question that we don't know the answer to, is that we talked about, you have the election to use the new law for the 24 weeks or the 8 weeks. We think that this 60% applies to all loans, regardless if you use 8 weeks or 24 weeks, but we don't have any clarification on that, right?
Correct. And the way they put it in the bill was, this is a new paragraph into the bill to add effectively to the forgiveness side of things. So it doesn't specifically say if you elect the 8 weeks, you can keep the 75% or the 60 applies. So that's another area we're going to have to wait and see if they clarify that section, so we have better guidance on how to move forward.
Especially with people who decide to make the election for the 8 weeks. So we'll kind of move forward to one of the cons, perhaps, of using the 24-week period, is they did some really good things with the FTE the safe harbor wage reduction. If you'll recall, these are the things we've been talking about, that once you actually calculate from the amount you spent on payroll and the other allowable items, that your loan forgiveness can actually be reduced if you don't have the same, or if you don't have the calculation correct for FTEs, or you did a wage reduction. And there's been a lot of concern from people on that, and making sure that they keep employees at the same levels when they compare them to the periods that are in the different guidance. And there's too many dates to kind of talk about, so I won't go through them because I'll inevitably probably mess them up. But one of the things on the law is they said, hey, we're going to expand the FTE and the wage reduction. Those are still there, but we're going to allow you some more exemptions on here. However, and Mike, you tell me if I'm wrong, if you elect the 24-week period, you're looking out a pretty far ways into the future of third and fourth quarter, and maybe having to look forward and say, I will still have as many FTEs at that period, but we don't know kind of where the economy is going. So can you kind of talk about that a little bit?
Sure. Yeah. If everybody can think back to our previous discussions over the past weeks, we spent a lot of time talking about the wage reduction and the FTE reduction and the new exemptions that had come out as part of the application process. They gave a little bit more freedom for the FTEs. Originally was if the employee refuses to come back, as long as you made the offer, the employee reduced their hours voluntarily, or if they voluntarily resigned or were terminated for cause. Those were all additional exemptions. Most of it revolved around the FTE calculation. So I'll hit the FTE in a second. On the salary reduction side, what we did learn was if you literally reduce somebody's salary, so let's just say their hourly wage went from $15 an hour to $8 an hour. Well, there would be a potential impact, but you kept their hours the same. You would receive a reduction for that. Same with the salaried employee. But most companies we were talking to weren't really necessarily reducing salaries by more than, say, 10%. They're really on the hourly side of things. And that's where the FTE calculations came in, because you used 40. So that's kind of the basis for then saying, okay, well, that was over an 8-week time frame, and as long as you corrected it by June 30, you would actually be okay. Now, we were still kind of wishy-washy on what does it mean to correct by June 30? Just snap your fingers and they're working 40 hours a week and you get your full. How exactly was that going to work was still one of the things we were looking for. Now you project ahead, and now we've got 24 weeks. And we have many clients who were doing okay through this period because they were still using up some of their backlog, but they're not bringing in new business like they were prior to the pandemic shutdown. And so they're worried about their third and fourth quarters and how will their business be doing. And one of the reasons that they were getting the PPP was to make sure that they could have that cushion, so that way when they got out that time frame, that they would be okay. But it's hard to say where their FTE calculation. So when you're planning to say 8 weeks versus 24 weeks, if you're looking ahead saying, I may have to reduce people's hours or even let somebody go, your FTE calculation may actually be less under that time frame than it is now, and that could potentially hurt your reduction, your forgiveness amount. Now, of course, then they put in some new exemptions in this bill, which will continue the flexibility. I do agree that this bill added a lot of flexibility. One of them was inability to rehire individuals. Then you had the inability to hire similarly qualified individuals who were employees prior to 215, or you're unable to return to that same level of business activity that you were prior to 215. So you added two different levels of employees. So you're not able to hire them back. You're not able to get somebody similarly qualified. Similarly qualified, I think we can probably understand what that means. Or because of the fact that maybe CDC guidance or your state requirements, they're not allowing you to get back to the same level you were before. So this has got to be somewhat government regulated issues. In other words, take a restaurant example. They can only get, say by the end of the year, they're only at 50% capacity still. Well, that's required, and so they're going to get an exemption from this FTE requirement because they can't get back there. So this did add some new flexibility from that, but it's hard to say exactly, if you fall under this 8-week, you're really going to have to take a good hard look to see what makes the most sense between that and the 24 weeks.
Yeah, for sure. Because I don't know if there was an exception, and who knows what flexibility they come out there with. Is I think you had a good point that when looking forward in the 24 weeks in third and fourth quarter, businesses may have to lay off people if the revenue or the business isn't there, and it may not be a complete shutdown. And restaurant, again, is kind of a good example, but even manufacturers or retail operators or just any type of service business that maybe looking as they are continuing to progress forward, they're saying, hey, it doesn't make sense that we still have all these people. We're not bringing in the customers or the patients or how that could work. And if they have made the election for the 24-week period, they would have to prove why that FT exemption would be in play, not because of revenue lost. Who knows what maybe they'll expand the government regulations due to social distancing COVID to include revenue loss. We'll just have to wait and see what guidance comes out.
Yeah, and I'm not, obviously we're not economists and can't predict the future and things of that nature. But when you do talk to most business owners, they're worried about the lasting effects beyond 2020 into 2021. And, it's hard to say how long beyond that until everything gets, back to whatever normal means nowadays. But, there's definitely going to be lasting effects. And so while this has added flexibility on one hand, it's added a little bit of complication because of the fact that, this inability to return your operations back to normal, back to this pre-215 level is really based on the government requirement. I'm not sure if you're a contractor, for example, who's not really dictated by any of the social distancing perhaps, and could, but just doesn't have the contracts for whatever reason. Maybe they're highly residential and commercial, and they're not able to renew at the same rates they were before. So it's just one of those things that we have to go through the thought process to see what's going to be the best scenario for your individual business.
Yeah, definitely. So again, it made flexibility, but didn't make it kind of like clear cut of which way to kind of look, unless you just know, hey, I feel pretty solid that for the next 24 weeks, the business, I won't have to let any FTEs go. Or if I did, again, the worst that happens is that your loan forgiveness gets reduced and you have to pay a portion back. If you're under the 8-week period and you weren't going to make your payroll cost anyway, you were going to be in the same scenario. So it is a matter of evaluating the materiality to the numbers at this point. And getting that people have asked, hey, how do I make the election to use the 24 weeks versus the 8 weeks, and we have no idea at this point how that's going to work or how banks are going to ask for that, if they're waiting for you to apply for forgiveness, if there's a time thing. Hopefully by the end of this week we'll get a little bit more clarity, but as we said, I think the SBA and Department of Treasury are probably scrambling to rewrite the rules now that Congress has passed this. So one of the things that, lastly, well, actually a couple things. So one is they did not make any change to the IRS ruling that came out a few weeks ago that said if you received the loan and it's forgiven, that qualifies as tax-free income. However, the IRS said that any expenses you incur related to that are part of the forgiveness calc are not expense, you can't expense, which effectively made the loan forgiveness taxable. There was a lot of talk in the Senate about overhauling this and changing it, but that was not part of this law. So that still does is still in play, that now if whatever portion of the loan that you get forgiven is the expenses related to that will not be deductible. So I did want to clarify that they did not make any technical correction for that yet. And then they also kind of randomly allowed a deferral of the payroll taxes that they had allowed during the CARES Act. They made this applicable to all PPP loan applicants. Mike, can you talk a little bit more about that?
Right. So there's been a number of employer portion of payroll taxes provisions. There's been obviously there's been a lot of discussion over payroll taxes, but if you receive the PPP, a lot of that didn't apply. And so, and I think the thought process obviously is the goal is effectively you're getting a grant here. So they didn't make it apply, but they did go back and effectively say that the employer portion of the payroll taxes, you do have some deferral options there. It does apply to you. It's another section in the CARES Act. It can now apply to you. It's something for you to consider. And so it's just, I think, one more thing to look into from a cash flow standpoint, depending on your cash flows. Of course, you will have to pay it back at some point. It's not just one of those things that it's just forgiven. It's just a deferral at this point. So I think it's something to look at very carefully if you're considering it. It would effectively remain as a liability on the books. But it just gives one more option for companies to maintain cash flow through, what for many companies is a very difficult time, and cash is obviously important to maintain working capital, especially if you're trying to ramp back up, and sometimes that ramp up time requires more cash until you can get your revenues flowing and cash flows flowing.
Yeah, no, that's a really good point, is that if you'll recall in the PPP loan proceeds, they could be used for payroll, which was gross payroll for your employees. So that covered your employees side of payroll taxes, but the employer still had a portion that they had to pay, and that was not part of the PPP loan proceeds calculation or part of the forgiveness. So this deferral of taxes allows, if you have a large liability related to that, to defer it over a 2-year period. But again, like you said, Mike, the liability doesn't go away, it just gets deferred. Yeah.
Right.
So there's, other than the new exemption, talking about the 24 weeks and the FTEs and safe harbors, all other rules in the original guidance and application and CARES Act still apply. These are just the big changes, right? That's
correct. We do know that you're still going to have to hit the 60%, 40%, same concept, other than not sure about the cliff or not yet. I mean, it sounds like there may be, but you still have the FTE calculations. You still have the potential for salary reductions. You're still going to have to go through, I think the application itself will largely look probably pretty close with these modifications to them. So everything else that we knew before, we know now. It's just now you're automatically at the 24 unless you elect the 8. You've got the 60-40. Still got to get some more guidance around the 60-40 versus the old loans that were 75-25 and how that applies. We do have some new exemptions that will give us a little bit more flexibility on hopefully that forgiveness side of things. But really everything else we're looking at is largely the same. And I think companies now just need to look at their individual situation and say, if I'm not going to hit the numbers in the 8 weeks, and I really could use this cash flow and not want to pay back money, well, then the 24 weeks makes a lot of sense. If for some reason, looking ahead, the FTE calcs could become troublesome, you might want to look at trying to maybe electing the 8 weeks. It's going to be so individualized for each company. But that said, at least you've got the flexibility. I know there are companies that are frustrated out there that have gone through the 8 weeks and have been spending cash on paying people to sit at home. And I know some have even had problems with employees who didn't want to come back because of the fact that they were getting higher amounts of unemployment. So this has created a whole lot of issues. At this point, obviously, there's nothing anybody can do about that, but we do have the flexibility to look out at 24 weeks. And hopefully for most companies, this gets it back to more of a grant than it was becoming sort of a partial grant, a partial loan. And I think this should get most companies over that hump to be able to hit the 100% of their loan.
Yeah. And one thing I think we've learned over the past few weeks, months, however long it's been, like Mike, I can't remember either, they seem to all blur together, is that I think one thing they've shown is that we talked about fluidity a lot and that things are constantly changing. This kind of proves that 6 weeks from now, they can make another change to this law if they feel like this doesn't do enough. Or they could clarify, or something gets clarified and people feel like it's too draconian or going to hurt them, they could change it. But we understand that certainty is really important, and so you want to make decisions based off of what the law is today. It's really difficult with this, with everything that's gone on in this coronavirus pandemic. We hate saying it, but again, things just continually change. So we've counseled a lot of clients and a lot of businesses on different ways to make up those 8 weeks, whether it's bonus, commissions, paying, how to pay overtime as part of the normal wages. And now they're saying, well, this didn't even apply. Again, we just kind of have to go with what they were giving us today and make the best decision based off of what we know. And we understand that's frustrating. We're frustrated too. But I try to look on the bright side to say, but if something from this law doesn't look like it's going to pan out for a lot of companies, heck, they could change it again, right?
Yeah, I think that's exactly right. At this point, one of the things I'm just suggesting to everybody is, if you can, be a little patient on exactly how this is going to work under these new parameters, because we are going to wait for more guidance that hopefully explains some of this. I do agree. They do seem to, when something doesn't seem right or seems like it's going to be very problematic for the bulk of companies, they are changing it. So, and they've talked about doing other forms of these stimulus bills down the road. I don't know what they'll look like. I don't know if they'll extend the PPP for those who haven't applied yet. I know we're coming up in a couple of weeks on what I guess is a deadline to apply, June 30th. I don't know if they'll extend that. So I think being fluid and being patient is probably the other thing while we continue to learn. We will keep updating through our e-blasts and through our webinars as we are getting information and something that is hopefully actionable. We'll keep you informed in our weekly updates to the extent that there's something to go over. So again, just asking patience while we, just know that in another week, 2 weeks, 3 weeks, we'll probably have a little bit more information out there that we can, provide more guidance on.
Hopefully so. I know we're all waiting for that. But yes, if you have any questions you have, feel free to email us and we'll do the best to answer it, as our other CPAs and our bankers around the country trying to figure this out, as again, we're flying the airplane while building it and changing it as it goes. But certainly we feel like this was a welcome reprieve for a lot of clients and a lot of businesses, that they're not so worried about the 8-week period now that it's extended to the 24 weeks. So looking at it as far as hopefully being a positive and not as stressful as it was before. Mike, is there anything you can think of that we didn't cover that we wanted to talk about?
No, I think just keep those thoughts in mind about, does the 8 weeks really make sense? And I think if you're stressing out about the 8 weeks, really the 24 weeks gives that just so much more flexibility. Like you said, just give us a call if you have a question. We'll do our best to answer it and try to keep you moving in the right direction.
Very good. Well, thank you, Mike, for your time, and thanks to everyone for watching with us. Again, a reminder that we have a website on JMCo.com, our COVID-19 resource center, and we have a whole page dedicated to PPP loans and loan forgiveness that we hope is updated with the most information that you need, as well as all of our back power lunches and webinars and our on-demand webinar as well. If you have questions, you can email us at info@jmco.com, and we'll do our best to answer them with the information we have. And again, Mike kind of indicated this, every situation can be a little bit different depending on your circumstances, so it's hard to answer broad overall questions without knowing the details. So we look forward to seeing you guys next week with the COVID-19 Power Lunch, and with the topic to be determined, as it seems to be changing on a daily basis. Thanks for joining us.